Good day, all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Wednesday, and we're now at the 25th of September, 2019 at 1:45 p.m. Central Daylight Time. A down day in the grain markets, as you can see. In fact, if you look behind me, there's a lot of red in many of the commodities, be it the energies, the bonds in the notes. You're looking at the metal markets down with the exception of copper so far. And what's really going on is, of course, we're still dealing with what has gone on in terms of the impeachment proceedings, or the inquiry as it's called, that the House of Representatives has underway. I just watched an interview between President Trump live and the president of the Ukraine, and the Ukrainian president was very clear. He said it was just a normal phone call. Nothing that he says, either one of the presidents, is going to make the House of Representatives change their ways. So I think you're probably looking at an impeachment, and then from there goes to the Senate and the world changes. We'll see what goes on. I'm not saying it's a given that they won't impeach. I'm saying it's a long road. So we look at the market down. There was a Japanese trade deal today, so that's good news. About $7 billion in goods are going to be flowing from the agriculture sector to them, tariff-free. So that's or sharply reduced tariffs. It'll be one of the two. Nothing on automobiles yet. China bought more soybeans in August, their Commerce Department said, and I don't know where we're at with Chinese trade in the U.S. When you still look at the soybeans for the week, we're up 6.5 cents. You can see that right up here. The market still has upside bias as it's over the 18-week moving average of closes. When we go to the daily chart, I think you'd agree, we have a distribution pattern right here. We're not going up, we're not going down. It sort of ran into a peak right at this area, the 904, 905 area, slipped back very close to 880, and it's just been hanging around here. And you get the feel for that when you look at the swing lines, which have higher lows, but in all fairness now they have lower highs. So you have a market that's coming down like that, and you can see it right through here. And then you're coming up at the bottom part. So let the market do its work and figure out which way to go. Should you get under the 880 rather in 3/4, the trend would turn down. You'd have lower highs, lower lows. Get the market back over 899 and you put into play this whole region here of the 910 zone coming into a resistance area. Got to wait and see which way it wants to head. Where's the battleground? Very clear. The 100-day average of closes. If you slip from here, wherever that 18-day average comes in, that'll be the support. I think tomorrow, because it's 881 on the close today, it should be a little bit higher, so it'll be just over that 880 and 3/4 level. When we look at Bollinger Bands, other than getting to them right up here, this first challenge of the 100-day and the upper Bollinger Band, admittedly, you got over it. You pulled back to that 100-day and just been chopping right in that zone ever since. And in momentum, you're very overbought. Now, do we get harvest pressure at some time? Or, because we're so late in the season of planting this year, do we get bad weather coming through and we get the early frost? Your guess is as good as mine, but the market is watching to see. In the meal market, all we did is we rallied yesterday to the upper Bollinger Band and gave that whole thing up. You're just caught in this play here that is so difficult to play because you're not getting enough money to make it worth it. It's just bouncing around with very little follow through. You can't break out of the top or lower bands of the Bollinger Bands, and remember, 95% of the time you stay within them. However, the longer you stay within them, it's like a spring winding in a pipe. Eventually the breakout comes, and the longer the sideways action is, the more powerful the breakout. When we get to the soy oil, you can see how the market's now fighting. Once it got down to that 18-day average, just sort of stuck right against that number. The market's got a pattern of a lower low, higher high. It's sort of saying to the soybeans, tell me what to do. Which way do I go with this? And they're just sort of stuck waiting there. In the corn market, this has been a very labored move to try to get to the upper Bollinger Band. The trend is up, the bias is up, and you are overbought. You can convert from overbought when the slow stochastic reading keeps both numbers over 80, which it has here on the close today, but you got to do it at least 3 days in a row. You don't have it. So tomorrow could be that third day. Markets generally don't like to embed, but when they do, and you can see this one, it did it down here. For a while it had it up here. It's an important event because it could set trends in place. We'll wait and see if the market does that or if it steps out of it. In the wheat market, you're not in any trends. You have a higher high, you see that right there? A lower low. You pulled back to the 18-day average. When you lost the embedded reading here, that was one, and you did have your up move as that was all taking place. Once it got lost, and it was lost yesterday, then you put in the play, can you get to the 18-day average? And that's what the market's done, so it's just sort of sitting and waiting. In the sugar market, you're continuing this run to the upside. The seasonals at this time of the year are friendly too, which is interesting. Will you make it to the 100-day average? We talked about that yesterday. That's the goal if it can get there. This is only the first day over the upper Bollinger Band, so it's overbought, but nothing serious yet. We'll see what it can do. In the coffee, today was a rejection of the downside. Coming in, this is what the chart looked like. And I could argue that you had lower highs, lower lows, downtrend. Question is, what happens if you take out that low? You took it out and you spun right back. You are not trending. You are instead fighting at the 18-day average of closes. Look at how many times you're hitting it, not going anywhere with the follow-through. Resistance, the 100-day average, but you have a lower low pattern with a higher high. Just not a trend in the market. In the cocoa market, cocoa's still staying in an uptrend. This is what I study. When the stochastic study embeds, it means to me that pullbacks in the market are likely being bought by the pros, and that's still going on. If you lose that red line, I look for price and first, the 100-day average to come at each other. In the cotton market, you're down to this 18-day average, and that is your battleground. The market still has a pattern of higher lows and higher highs, but momentum is pointing down with the bias up. Chart's got too much divergence. In the cattle market, you have an embedded reading, which is what? Bullish. The market is running, trying to get up to this Bollinger Band and 100-day average. I don't know if it'll make it or not, but that's where I'm expecting. The pros are going to greet it with some selling of taking money off the table. That does not mean they're going short. You're over the market, taking money off the table. In the feeder cattle, I would have thought that right here. But as you can see, as you got embedded, the market's just continuing to run. So yeah, they might have taken some money off the table. If they're holding on, they're just waiting to see where this party is going to end, but it's a nice party. And in the hogs, you got up to the zone where I think the pros today said, okay, we're up to an area we can pay some attention to. But the one thing I keep reading is meat prices around the world are going up because China is so aggressively buying meat from everywhere. They have a serious problem. Pork is obviously a mainstay of what they need. They don't have it. We have it in America. I don't know why they're not taking it through Smithfield and doing more, because they own the Smithfield brand, but we'll see what goes on with that. We write about this specifically and a lot more. This is the grain season, guys. You want to see what our firm writes. They're giving you ideas as to what they're seeing in the fields, what we're hearing from our clientele. Remember, we deal with commercials, we deal with the elevators, we deal with the farmers, and of course the speculators. Banks, too. You might want to get an idea of what we do in these markets because this is such an important time of the year if you're in the ag sector. How do you get it? Well, if you haven't tried it before, let us do that for you. All you need to do is go to our website, and on the front page, you're going to see our free offers. Click on it. You'll see all the different offers. We've made it now where you just click the different ones you want. They'll show up in a cart for you, and away you go. We've made it very, very easy. That's at www.iraepstein.com. If you're watching me on YouTube, just click right here. It'll take you right to our homepage or to the page you sign up, and away you go. I'm Ira. You have a good day, and I will talk to you tomorrow.